Hello everybody, and welcome back to another episode of Options Discovery on John Lothian News' The Spread. My name is Alex Teng, and I'm going to be your host for this episode. And just like you, I'm no expert in the options industry, but with the help from some, we can learn more about options together. Today we're going to be talking about the differences between the institutional side and retail side of the options industry. We also get to sit down with Chen Liang, the co-founder of an up-and-coming startup called Odds.Trade. Odds.Trade is a mobile-first options research platform that enables its users to learn more and do more with options on a day-to-day basis from the convenience of their smartphone. Just like many other financial markets, anyone can participate in options markets as what's known as a retail trader. And a retail trader is essentially just a non-professional investor that buys or sells securities. Through the advent of internet-based trading, anyone can set up an online brokerage account and start trading options. Although this is a great way to democratize financial markets, it also highlights a divide between retail traders and institutional or professional investors. Institutional investors are often referred to as the professional side of the trade and control large amounts of capital. They're often, but not always, more experienced than retail traders and have more tools at their disposal. Institutions often represent a pool of capital that mainly consists of money from outside investors. A good example of this is a large pension fund or hedge fund. Institutional investors often play an important role in options markets. One role that an institutional investor can play is the role of market maker, in which an institution will provide liquidity to the options market in return for the spread on those options. And the spread is essentially just the difference between the bid and ask price on a traded asset or security. Over the past few years, more and more companies have lowered the barrier to entry for trading options. Apps like Robinhood allow traders to use options with just a few clicks and a premium membership. Often retail investors end up losing a lot of money due to their lack of understanding and experience with the products that they're trading. One of the biggest advantages that institutions have over retail investors, besides large amounts of capital, is the education and data resources they have at their disposal. Retail investors just don't have access to the same level of knowledge or resources in most cases. In options markets, many big institutions trade custom contracts outside of a traditional exchange. Now, these custom contracts are often referred to as over-the-counter contracts. And over-the-counter deals don't just have to be done with options. Over-the-counter deals can be done with many different types of derivatives, including futures and swaps. Over-the-counter derivatives are just not offered to retail investors. They are, however, commonly used tools by institutions that require certain specifications for trades that just aren't offered by exchange-traded contracts. We will go over over-the-counter contracts in more detail in a later video, but the important thing to note is that they are a huge part of the institutional options trading world that retail investors rarely get to see. Even with all of these advantages and resources at their disposal, institutional investors still sometimes make mistakes, and retail investors are able to take advantage. The most notable case of retail traders causing massive losses for institutional investors was the GameStop short squeeze of 2021. Now, you can read more about the GameStop short squeeze on marketswiki.com, but the basic premise is that institutional investors built up large naked short positions and were at a huge exposure to losing a lot of money if the price of the underlying asset, which was GameStop stock, went up. Retail investors saw this opportunity and used long call options and the purchase of the underlying to raise the price of that underlying stock, which was GameStop stock. And once they did this, they caught institutional investors in what is known as a short squeeze, forcing them to try to cover their naked short positions. Although this strategy did turn out well for a large amount of retail investors, situations like this are the exception, not the norm. Some traders did make a tremendous profit during the entire ordeal, but many more suffered huge losses as well. It's just that the traders that ended up losing huge on GameStop stock and GameStop call options just didn't have the education and resources at their disposal in order to really understand what they were trading. This is where our guest today comes into play. Chen Liang has a PhD in engineering from Vanderbilt University and is also a CFA Level 2 certified analyst. Chen and his co-founder Junji are working on a mobile-first platform to bring digestible and easy-to-understand options research into your pocket. Advancements and applications like these are critical to the development of options markets and help bring retail investors on the same playing field that institutional investors have been on for years. With all that being said, please enjoy my interview with Chen Liang from Odds.Trade. Welcome everybody to our interview with Chen here, the co-founder of Odds.Trade. I just kind of wanted to learn a little bit more. What is this company all about? And why is it so important to the options industry?
Me and my co-founder are building Odds.Trade for retail options traders and allow them to quickly generate and assess options trading ideas. My education background is in statistics and also work as a data scientist in the industry for 5 years. So what I'm good at is to take enormous amount of data, building data models and generating insights from that, and also deliver that insights in a plain language that my grandma can understand. My co-founder, he has more than 13 years of experience in the tech industry, leading a team to design and build mobile products for various of businesses. So he's really good at encapsulate all the visualization, the insights, and the tooling into a very neat product so that people can use it at any time, anywhere.
What really inspired you to kind of make a tool that was more targeted towards the entry level to even more advanced retail options trader, rather than just create another quantitative tool for the institutional side?
First of all, I like building a B2C product has a broader influence. You can just affect more people's life. You can just help more people by building a B2C kind of product. Like the growing number of retail traders actually doubled during the pandemic. And also that number is not changing, or it's just steadily growing in the last 2 years. It was actually my co-founder who pushed me to kind of generating content and put it on social media. I really started to talking about anything about investment, not only options, but also stocks, fundamentals. And I observed the tractions of the posts I made there. It turns out that, options tools get a lot of tractions. A lot of people ask me the questions of, what is it and how shall I use it in my trading? And that is the direct driver of how we end up building what we're building right now.
In terms of the company right now, where are you and what is your future roadmap for this company?
Currently, what we're offering are the visualizations. This including the price actions, the implied volatility, and also some earning analytics. What's different from us is we're also embed the education content right next to those concepts, so that for entry-level user who are not familiar with implied volatility or how to use implied move versus actual move in the earnings, they can just click in a button right next to the title to see a detailed description of what those concepts are and how to use them. And we also linked to external videos and articles that shows how the pros are trading implied vol or other concepts in actual trading. And we also have a trade builder part where we really Odds.Trade just provide an innovative way of building complex option strategies. So instead of letting users to go to the gigantic option chain and identify individual contract one by one, we bucket different type of option strategies based on their sentiments. For example, if you have our app, click on the bearish button, you can see a longing a put or just put a debit spread or call credit spread, and then you can change your budget that represents the maximum amount of capital that you are willing to risk on this particular trade. And you will see that all the strategies will update it according to your sentiment. And then click into the strategy, you will see the detail, including the details of each individual contract that constitute the strategy. And you can use those information. We are more like a community-driven product development approach. So essentially, it's up to the users, the customers, to decide, to choose, to vote on what features they want, and then we're just going to be building it accordingly.
I saw that one of your taglines was that you wanted to make option research accessible to all investors. A big part of that is your educational features that you're embedding. Can you speak a little bit more to how those features work and why they're so important to retail investors that use the app?
I've talked to many options traders at various levels, and from the the experience of everyone I talk to, and which is also validated by my own experiences, is at the beginning, like everyone lost money without even knowing why. This is like an implication of the lack of education and knowledge of options when people first getting into the space, right? And if you just search option research online, most of the material coming up are more templated, textbook, theoretical, talking about the theory of options and what is a call and what is put. And they are very detached from what the actual trading practices are. Typically, if you want to generate a well-planned trade, you need to grasp information from multiple sources. And that is very difficult for the entry-level options trader to do because, first of all, they don't really know where to find those resources. And second of all, like if you search existing tools, most of them are lack of the education and instruction to help users ease into understanding how to use their information. So that is the gap that's there, right? Make it extra challenging for the entry-level options traders to learn about options well, and then let alone like generating a very thought of trade. And that's where we're coming in to change it.
You talked earlier about how you had a mobile-first strategy for developing this app. And my curiosity was behind why create a tool designed around mobile devices first. What's the importance of, shrinking this down to that mobile format and designing the UI around that?
40% of the orders, option orders, are actually executed on mobile device. That's just a fact. More and more people, especially the millennials, the Gen Zs, they are using their mobile apps for trading purposes. That's why we want to build a mobile-first application to reduce that friction of jumping between apps and when you are when you're doing research versus the actual trading. Now we are a research application, but essentially we're going to be integrated with the most popular brokers, so that to create this frictionless and seamless experience from research, from idea generation to the actual trading. I have lots of friends who have a 9-to-5 job, doesn't have a lot of time to stare at the monitor and execute day trading. They need an easy way to kind of look at the market or get notified when things happen and then quickly trade.
Every week we choose a new topic for the show. This week, the topic was all about, retail versus institutional investments and some of the innovations like Odds.Trade that have been happening in the industry to kind of either even the playing field or just make some distinction between the two. What is a topic that you'd recommend that the show should cover in one of our next episodes?
From my perspective, we're engaging with a lot of retail options traders, and retails, they are requiring more and more educational contents and research material. They have also the hunger for actionable insights. And given the current market environment, right, there are the inflation and then the potential recession and the bearish market. I would like to know, or I would like to see more professionals talking about how they are leveraging options to cope with the current market.
Yeah, that's a great topic. And how you can use options to navigate a downward market is a good topic to go over. Lastly, before we close out this interview, I would just like to see where can we find Odds.Trade when it releases? Is it on the App Store, Google Play Store? Where is it going to be released?
We're currently beta testing, and it's in iOS. And we're going to be officially launching the Apple App Store in a few days. But now, if you want to have a first take of our product, you can just go to www.odds.trade and sign up and to be our beta user.
Perfect. I think everyone will appreciate that. Go check out the app if you want to be a beta tester. Chen, I want to thank you for coming on the show. It's been a pleasure talking to you, and hopefully we can catch up at some point later on.
Thank you for having me.
Thank you for watching this video, and hopefully you got a little bit out of the interview and learned a little bit about the differences between retail and institutional investors. I hope you enjoyed it, and I'll see you in the next one. Bye. If you're hungry for more options content, make sure to subscribe to the JLN YouTube channel and check out our social media accounts. Be sure to check out our website, johnlothiannews.com, Markets Wiki, and the John Lothian newsletter for more content.